stumbled across Near Protocol, a really promising smart contract platform, a layer 1 which could potentially join the rest of the Ethereum killers. But can it realistically 100 or even 1000x from here? That is exactly what we're going to be breaking down here in this video. We're going to be looking at the tokenomics. We're going to be looking at the distribution of the tokens. We're going to be looking at the supply, the fully diluted value, and so much more. So make sure you hit up the like button. Don't forget to subscribe. By the end of this video, you'll know whether Near Protocol has a place in my portfolio and whether I'm looking to dollar cost average into this token. As always, guys, let's get straight into this. If any of you guys have seen any of my previous tokenomics breakdown, you will know that we follow a similar line of attack, and that is to first and foremost make sure that we are looking at the formula. And the most important formula is this: market cap is equal to supply times price. And again, guys, if you've seen this or if you know this, fantastic. But the majority of people, and there's a new crypto investor born every single day, they look at the price of a token. They look at that, look at the fact that Near Protocol is trading at $3.60 and think that is cheap. Bitcoin is at like 30,000, right? That's crazy. That is the huge fallacy, okay, guys? So market cap is the indicator of value, not the price. Very, very important. So when you're comparing different projects and how valuable they are, you compare them on a market cap basis. And the way you get the market cap is you multiply supply by price. So if you head on over to any data website, such as CoinMarketCap, you can use CoinGecko or something else, you will find these information readily available. So I typed in Near Protocol. You can then head over and you can see very clearly, this is your circulating supply at 719 here, just above my head, and you can see what the price is. If you multiply these two together, you get your market cap of $2.6 billion on Near Protocol. So that's the market cap as of today on Near Protocol. 720 multiplied by your current price of 3.64 at the time of recording, and you have a market cap of $2.6 billion. Now we're in a position where we can go, okay, can we realistically get a 10x? Can we realistically get a 100x? Can we 1000x from here? We can't do that just off price alone. It's not okay to say, oh, simply, why can't we just get to, $300 here on Near Protocol? You have no basis to compare that on. But when you're looking at market cap, the 2.6, now we can realistically look at that and say, if we were to 100x this, is that realistic? And that's what we need to now do. So the first thing you want to do, just like any stock, crypto is exactly the same. If you're comparing real estate, if you're looking at stocks, what do? You look for something called comps. You look for comparable projects that you can compare the market value to, because otherwise, how else would a market place value on anything, right? When you buy a chocolate bar, when you buy an iPhone, when you buy a computer, when you buy a house, when you buy stock, you look at the comparables in the market before placing value on that item. And here with Near Protocol, a very promising smart contract platform, high TPS, right? Looking to be an Ethereum killer. They've implemented sharding already. We've got plenty of other smart contract platforms, layer 1 solutions out there, which we can compare it to in terms of market cap. And that's what we're going to go ahead and do right now. So what you see initially is you have a multiple. And I've used number 1 here for the current price, which is $3.64, currently sitting at 2.6 billion in market cap, which we've just covered off. Now the argument is, can we 10x? So for us to do a 10x, that would imply the price is $36.4 on Near Protocol. In other words, for us to get from $3 to 36, which would mean you would have 10x'd your money, we need the market cap of Near Protocol to reach $26 billion. Now, what does that mean? Can it do it? Can it reach $26 billion? We're going to break that down, because the way you break that down is by looking at the competitors. And what you will see straight away is Bitcoin, in this suppressed market right now, in this downturn, is sitting at $412 billion in market cap, okay? We know this has been higher than $1 trillion, with many saying it was going to reach $2 trillion, etc. So that puts that into perspective. But then looking at something like Ethereum, which is the gold standard at the moment of smart contract platforms, we know it has its failings, which is why you have all these different competitors. They're sitting at 143 billion. And again, this was much higher than 400 billion when in a bull run, right? So this is hugely suppressed as well. Moving on down, you have something like BNB with the Binance Smart Chain sitting at 37 billion. You've got Solana, again, a high throughput smart contract platform with great speed, sitting at 13 billion. We know they've had their issues as well recently, further suppressing their price. I've used Cardano as another comparable, another smart contract platform, very different from Solana in terms of they try to go slower and not break things as fast, but maybe they get a lot of criticism around not doing much quick enough, right? So they're sitting at 17 billion. And then you've got something like Avalanche, again, another promising platform, along with Phantom, in the smart contract platform space. Avalanche with their subnet sitting at 5 billion currently. Phantom under a billion, 746 million. So straight away, you can put Near Protocol straight in between Phantom and Avalanche. In other words, Near Protocol currently is half the market cap of where Avalanche is. So if you want to say, can we get to 26 billion? That would imply you are 5x the price of Avalanche. Now, that doesn't mean you have to be 5 times better than Avalanche. It just means the market has to get better, right? So straight away, if the market is picking up and Bitcoin returns back to all-time highs, okay, of, let's say you get back to 1.2 trillion, that's a 3x roughly here on Bitcoin. But realistically, so whilst that Bitcoin does that 3x, realistically, can Near Protocol do a 10x and reach that 26 billion? I don't think that is beyond the realms of possibility. I think that is very, very achievable target. Let's move on now. What about something like a 50x? Okay, now we're talking. So, and the reason I want to cover this off and break this down like this is a lot of people, when they start investing cryptocurrencies, they go for the YOLO, right? They go, yeah, I'm going to buy this. It's going to 100x. It's going to 1000x. Why not? My friend told me it's going to 1000x. But now using this methodology, you actually can figure out if this is realistic or not. So we can tick the 10x and say that's realistic. If I'm investing in this for a 10x over the next year or so, I think you could put that in the category, easily in the category of that's very possible. If the market turns back up, Bitcoin is 3x, Ethereum is doing a 5x, you've got other coins moving. Why can something like Near Protocol, if it's set up well and continues to deliver, not achieve a 10x? Now, the 50x is where it gets a little bit more tricky. 130 billion. That would now place it at roughly Ethereum's current market cap. But again, we're saying in an upturn, Ethereum is closer to 400 billion, 500 billion. So then you've got Ethereum sitting at a position, Near Protocol sitting at a position where it's about a third of Ethereum's market cap. Again, not crazy out of reach. This could be the goal that you could want to achieve over the next period of time, but it's going to take a lot of work, right? It's going to take a lot of work in order to get there. Now you want to look at the 100x. The 100x is the famous number everybody wants to use. In order for us to get 100x here on Near Protocol, the token would have to be worth $364. In other words, for every dollar you put in now, you want 100 back. The token's going to have to be at $364 per token, which is a market cap of $261 billion. Yep, $261 billion. So now you can see where we're getting to. Now we're getting to Ethereum's kind of, again, Ethereum can easily recover back to 400 billion, 500 billion, and therefore you're saying this can be half to 2/3 of Ethereum's market cap. Again, something that's possible, but now you're going to need the wider market to really grow. You're going to need Bitcoin at all-time highs. You're going to need Ethereum creating new all-time highs. You're going to need Near Protocol to continue to execute at this pace, because the reality is none of these other smart contract platforms have yet to get to that kind of size at 260 billion. So now we're heading into uncharted territory, and you're also betting on the fact that Near Protocol is one of those to survive from the competitors we've listed out here. So it's not as straightforward to say it's guaranteed we're going to do 100x. The 10x, you can say, okay, that's realistic. The 50x, you can say, yes, if you execute really well and things go your way, you can even get a 50x on Near Protocol up to 130, but you need a lot of things to go your way. 100x is spotless execution, the market growing, Near Protocol being one of the best layer 1 solutions out there. That's what you're betting on in order for this to happen over the next few years. And 1000x, that 1000x, the number everybody likes to use, you would need the token to be trading at 3,640 per token. And again, that would mean a 2.6 trillion. Yes, 2.6 trillion market cap here on Near Protocol. So anybody who's telling you that Near Protocol can 1000x overnight or in the next year, just dump some money in Near Protocol, it's going to go to the moon. Just understand that 1000x would mean you are almost sitting here at, two times the global, more than 2 times the global crypto market cap as we sit today. Okay, so to put it into perspective, Bitcoin's been to 1.2 trillion. You'll want to double that here for Near Protocol to do 1000. In the future, who knows what happens long term in the future, but that is not a realistic goal for you to be setting if you want to sustainably and pragmatically invest in something like Near Protocol. So hopefully that gives you an understanding of what's possible here in the realms of returns on Near Protocol. Now, the other important thing to look at, and this is very important when looking at the tokenomics of any project, so if you want to go analyze another project after this, use this methodology, is to look at the circulating supply versus the fixed supply. At Genesis, going back, Near Protocol issued $1 billion minted. 1 billion Near tokens were minted at Genesis. Now, currently in supply, circulating in supply, are 720, call it, million Near tokens currently. That gives you a 72% circulating supply. Now, why is this important? Well, this is important because if you have too little in circulating supply, we looked at, for example, Optimism token. I'll link up the video for the tokenomics episode of that. That was sitting at 5% circulating supply. Now, 5% circulating supply means there's 95% more tokens to be thrown onto the market. Now, when you throw tokens onto the market, what does that mean? You're increasing the supply of the token, thus pushing price down, okay? It puts a downward pressure on price action. So this is a very healthy number, 72% circulating supply. This is quite good here on Near Protocol, and I'm happy to see this for a smart contract platform that they've got the vast majority of their tokens in circulating supply. There is still a little bit more, 28%, to come out, and we can see what effect that can have. But that's a tick in that box in terms of circulating supply. And the other reason that's important is when you look at the fully diluted market cap. So currently the market cap sits at 2.6 billion. But another useful metric for you to look at is something called fully diluted market cap. And that is, what would the market cap be if all 1 billion tokens were in the market? So you times the price, $3.64, multiplied by the billion tokens, which we know will eventually be in the market, and you got a fully diluted market cap of 3.6. Very important when looking at different layer 1 solutions. If you're looking at Cardano, you're looking at Solana, you're looking at Phantom, you're looking at Avalanche, go and look at the fully diluted market cap. Then you're comparing them like for like. You can have a coin like Phantom with very high circulating supply, with very little more supply to come into the market, okay, versus another layer 1 platform, which looks like it's sitting at a reasonable market cap, but really its fully diluted market cap is already astonishingly high. So be very, very careful with that. This one looks sensible. Okay, so now you want to look at what happened with these tokens, right? When Genesis happened, how were these tokens distributed amongst everybody? I'm going to move myself out of the way so you can see this for a little bit. Actually, we'll start at the top left. And what we'll do is you can see 17.2% were given to community, grants and programs. We then had 11.4% given to operation grants. 10% were given to foundation endowment. 11.7% ecosystem, early ecosystem. 12% was given to the community, so that's you guys, right? As in we could access that at 12%. 6.1% were the backers, people who helped them in the early days. 17.6% were the other backers, any funds that helped them really get going during the bear market when they were launched. And then 14% are the core contributors, in other words, their team. So as a set of distribution here, it's not the worst I've seen, but it's probably not the best I've seen either here on Near Protocol. So one thing, I mean, look, the team are being quite stingy here, is what I'd say. I'd say very little was given to the community here at 12%, and you can see a lot of it is sitting between small backers. I mean, if you add these up, core contributors plus the backers here, that's 20%. You got another, so call that 35% here, then another 10% in the foundation, plus operation grants and community grants, which you don't know who those are going to. Maybe there's certain projects which they're aligned with. So there wasn't a huge amount of decentralization in terms of getting this out to the community, which is very, very interesting. Now, other things worthy of note is the $1 billion which were minted. Okay, these 1 billion Near tokens, sorry, not dollars, these 1 billion Near tokens which were minted is not actually the fixed supply. They've built in a 5% per annum inflation, so they can increase the supply, and they will increase the supply by 5% per annum inflation. Now, it's important to remember, in the Near ecosystem, you use the Near token to pay your transaction fees. And they've committed to burning 70% of these transaction fees. Now, this won't make a huge difference. The inflation is still going to outgrow the burning, so it's not deflationary at all. And if you do the math, which I quickly modeled out, you need to be sitting at 1 billion transactions per day before the burning is equal to the 5% inflation. Okay, so that's when you're neutral. So anything over 1 billion transactions per day, and then Near Protocol can become slightly deflationary, But to put that into perspective, Ethereum is doing 1 million transactions per day. You're talking 1,000x the number of transactions per day that Ethereum is doing. But if that was to happen, if NEAR took over the world and became the de facto smart contract platform, and there was huge adoption across the world and everybody was doing 1 billion transactions per day, at that point, theoretically, you would be sitting at a neutral, non-inflationary, non-deflationary NEAR protocol. If the transactions increase more than 1 billion, it would start to become deflationary. Okay, very, very important. Okay, so the next thing to look at is this, and that is of the remaining tokens. So we figured out there's 28% remaining, right? And plus the inflation of 5% per annum. How is that supply coming out into the market? And that's what you can see here in the charts, is you can see that 12 months, 24 months, 38 months. And if I move myself out the way again, you hide over there, mate. 36, 48, 60. You can see at each of these stages, that's 1 year, 2 year, 3 year, 4 years, what should the token supply be? So you can see the mainnet went live on October 2020. So we're coming up to the 2-year mark here. So at 2 years, we should be sitting at 838. So we're sitting at about here at 720. We're on track on this line there or thereabouts, okay? So they are doing what they said they're going to be doing. Now, it's important that we look at this because remember, the more tokens that come out into the market stops the pumpability of your coin. So your coin is getting momentum. You want it to start running and get a bullish momentum as more and more people find out about NEAR protocol and you're looking to get your 100x. But if every time the founding team are dumping tokens, because remember, they hold a lot of these tokens, then that can stop the pumpability. I made that word up, I know, guys. Smash the likes if you like that. It restricts the pumpability of your coin, okay? So that's very, very important. But we're on track here based on how they want to increase this. Now, another thing worth looking at is then how are each of these vested and cliffed, right? So each of these who have been given the percentages which I shared with you, the foundation, the community grants, the operation grants, the small backers, the backers, how and when do they get them? Because this is important. Again, once they get them, if you're a backer, somebody who bought NEAR protocol, who backed NEAR protocol in the early days, and you got the allocation as we shared in the percentages which I shared earlier, then you want access to your tokens, right? You may be sitting on 100x, 1000x already, and you want your coins to vest in cliff so you can dump them on the market. So we need to be careful again, because if you're investing at a period where, for example, this inflection point at 12 months, where you saw a whole bunch of them got a bunch of their coins, at that point, there would have been some sort of dumping pressure affecting the price. So you need to be very, very careful. This looks perfectly fine, doesn't look out of the realms of normal. It looks perfectly fine there, wouldn't be too concerned. Again, looking at their circulating and total supply, you can see here at the launch, they had 156 million tokens in circulating supply. By now, as we're coming up in October, the next couple of months, we should be at 838. We're at 720 now, as we just covered off. But you can see the total supply has increased. So it started off at the billion NEAR tokens. They've increased that at the end of the first year by 5%. They'll do that again by 5% and again by 5% and again and again. Okay, so it's an inflationary coin. Very, very important to understand that. It's inflating by 5% per annum, and the dollar's inflating by 8.6%, but the Fed's rate is 2% normally. Okay, so there you have it, guys. That is the breakdown of what to look out for here on NEAR protocol. Can it realistically 1000x? I wouldn't be going into it if that's what your objective is. Can it realistically 100x? Technically, if all the stars are aligned, but realistically for a 10x and a 50x and somewhere in between, is it a sensible position to add to your portfolio? It's something I'm definitely going to continue to research and continue to potentially dollar cost average a small position in the layer 1 section of my portfolio. So definitely a great project, a lot of exciting things they're working on. They've still got a lot to do. I mean, we're talking about they're 16th on TVL rankings with about 298 million in total value locked. But also at the highs, NEAR protocol, if we take a quick look at the price chart, was sitting at $20, which is very, very interesting. Okay, so if you look at here on the daily chart, NEAR protocol at its highs managed to hit $20 already. So already, just arguing, can you get back to all-time highs? You've got an interesting move here of just taking that move all the way back to all-time highs. You've got a baked in 400% there. So that's a 4.5x on your money just to return back to all-time highs. Remember, at those all-time highs, the market cap of NEAR protocol would have been $14.4 billion, which is a sizable amount for a smaller smart contract platform. As you can see, hugely suppressed here in price, like many altcoins are. I mean, if you manage to catch it at the lows, you're getting it at 85% discount. But again, definitely something I would consider adding and dollar cost averaging in a small position in the layer one smart contract platform part of my portfolio. Guys, if you enjoyed this video, make sure you smash up the like button and subscribe. If you want to trade any of these moves or add near protocol to your portfolio, it's available on BYBIT. Yes, links in description. Get yourself set up on BYBIT and you can buy this on spot. And you can own the spot and you can move it between your wallets. You can do that on BYBIT, okay? So get your link in description. They're giving you up to $4,000 in bonuses as well. So definitely consider using BYBIT to buy your near protocol tokens. Right, guys, if you enjoyed this tokenomic breakdown, make sure you go and watch this one because this coin also has some very interesting tokenomics which you're not going to want to miss. And I'll see you in the next one.